Welcome to the Business Outlook Survey press conference call. I'm Tom Elliott with the Public Affairs Department. With me today is Mike Treving, Senior Economic Analyst in the Research Department. Today, we're going to talk about what manufacturing firms had to say about business activity in October. First, Mike will give us a summary of today's report.
Thank you. The indicators from our October manufacturing survey suggest that regional manufacturing activity continues to expand this month. Despite the lower reading of the General Activity Index compared to September, all of the survey's broadest current diffusion indexes were positive, suggesting continued growth from September levels. Indicators for both new orders and employment improved over last month, both positive signs. The broadest indicators of future activity continue to reflect optimism about growth over the next 6 months.
Thanks, Mike. I'm going to go to Ellen Froelich from Reuters. You got a question?
Wait, get out of my way. Just talk to me about the special question. That's what I need to know.
Sure. We asked the same question last year, and we asked them basically whether their total workforce had increased, decreased, or stayed the same over the last year. And then we also asked them about the mix of between full-time, part-time, and various categories of agency and contract workers. Mm-hmm. And what we found is that compared to last year, we found, not surprisingly, a market improvement. Where last year we saw about the same percentage of firms showing increases as decreases. This year we've got a little over a half of the firms saying that they've increased employment over the last year, and about 27% indicating that they had decreased.
Wait, about a little over half said they had increased employment.
Right,
yes?
Right. Yeah, and that compares to like a third of the firms last year. So a substantial increase in the expansion of employment among this group of firms. And we also asked them about whether their mix of employees had changed over the last year. And the categories that we asked them to respond were regular full-time, part-time, short-term workers, on-call workers, temporary or agency workers, and independent contract workers.
Wait, full-time, part-time?
Short-term workers,
Mm-hmm.
on-call workers, temporary or agency workers,
Mm-hmm.
and independent contract workers. And we gave them definitions of those categories of workers in the question.
Right.
And then we also asked them about, for the combined categories of agency and contract workers, we asked them specifically what percentage of their workforce was accounted by those two classes of
Mm-hmm.
employees. And then the group, we found about 10% of the workforce for this, for the firms that did have those kind of workers, about 10% of the workforce were of those kind.
So, were those not full-time?
Right. So basically what we found is that we did have a larger share this time than last year of firms that were using part-time workers. About 3/4 of the firms indicated that they used regular part-time. Last year it was about 66%, so we did see an increase in that percentage.
Did you see an increase in part-time workers?
Yeah, as a share of the firms that actually use that kind. And then we also saw, increases in the mix, if you will, of those part-time workers. 15% of the firms indicated that they had increased their share of part-time workers. But on the other hand, we also found that about 35% of the firms had increased their share of full-time workers. And also we saw some increase in the share of firms using temporary or agency workers. So this gave us a little bit of a picture of the change in mix and also an approximate percentage of the firms that are of the workforce that use contract workers.
All right, okay. I'll look at these numbers separately because it's a little bit too
There's a lot of data there.
Confusing right now.
Yeah.
But I mean, just the general were firms in general using more part-time workers or more full-time workers?
That we can't really say from the data because we only asked about whether they were utilizing them, and whether their share of those kind of workers increased or decreased over the previous year. So we can't really say anything about
You can't say
numbers
about
per se.
numbers, but what about the share?
Yeah, and then according to the responses, we're seeing, the largest share increases in terms of the percentage of firms
Yes.
in full-time work, but also in the temporary agency workers, we're seeing 25% of the firms indicating a higher share of temp or agency workers. So it's not all of the information that we would need to say, about numbers and growth rates, but it tells us something about the mix.
Okay, so wait, so as a mix, just say full-time versus all the other, varieties lumped together. Is the portion of all the other varieties put together larger this year than last year? Is it a greater share?
That's a good question. You could pull up the table for last year and look at that. I don't have all of those numbers in front of me. We also were able to do breakdowns by crosstabs, if you will, on answers to other questions, but I don't have those specific numbers.
Right. Basically what I'm saying, here we're looking at a lot of trees. So I'm just trying to figure out what type of forest we're dealing with.
That's right.
Yeah, right.
Yeah, I'd suggest you look at the table and then give me a call back.
Okay.
You don't want to say more than what the data is really telling us.
Right.
But we focused in the write-up on just the improvement in the expansion of the labor force this year compared to last year.
Right.
And
right.
And then focus the rest of the write-up on the actual results for this month.
Okay. This is interesting. Thank you.
Okay.
All right. Thank you, Ellen.
It was a good special question to be asking because it's certainly, I'm sure it's the kind of
and
information that policymakers, people like
right.
responsible policymakers like those at the Fed.
And it's very difficult
like to have.
Sometimes it's difficult to pinpoint these questions. I mean, if you're talking about the effective mix from healthcare and that kind of thing, those are other questions that could be asked. But it's and we have done that in past surveys. But this is one we've standardly asked at least the last 2 years. So.
Right. Okay, Mike. Thank you very much.
Sure thing.
For your time.
Okay.
Yeah, and we'll be in touch.
Okay.
Thank you, Ellen.
Bye.
Thank you.
Bye now. All right. I thought we could also touch on some of the survey's indexes. Mike, the survey's future indicators show markedly improved optimism.
Right.
The future activity index is at its highest point since the 2009 recession, I noticed. How should we view this milestone when looking at the big picture?
Well, we've yet to discover a very good way of using the 6-month forecast to forecast future manufacturing activity. It tells us more about the improvement in sentiment over time, I think, rather than giving specific point estimates of growth over the next 6 months. But there's an obvious upward trend in optimism. It's not saying that that's going to happen over the next 6 months, but we're seeing improvement in optimism for shipments and employment and orders and even capital spending over the last 6 months. So it's a consistent story, and it's also consistent with the improvement in the current indicators, where we've had at least 5 consecutive months on the General Activity Index in positive territory, and the same for new orders, and also improvement over that general range of time for employment and shipments as well. So
yeah,
it's a consistent story.
So do the any comments that manufacturing firms volunteer, do they reflect the optimism in these various indexes?
Yeah, I think on balance, although we're still seeing firms with declines as we always see, and the diffusion indexes captured the firms that report declines as well as increases. And continued commentary on the fiscal matters that have been in front of us recently, with some firms being affected by the government shutdown, but it wasn't an overwhelming number of firms in this case, and it didn't seem to have affected the general diffusion indexes.
Oh, okay. Well, that's great. Look for next month's survey at 10 a.m. on Thursday, November 21st, 2013.